If you think you can afford a $500,000 house in 2026, there's a very high chance you're wrong. And I don't mean slightly off, I mean completely off, because the numbers behind buying a home right now are so brutal that most people don't even realize how far away they are until it's too late. So before you make one of the biggest financial decisions of your life, let's break down exactly what it really takes. And by the end of this video, you're going to know the exact income you need, why most people can't reach it, and what you can actually do about it. Because this isn't motivation, this is reality. So let's start with the dream. A $500,000 house sounds normal now, right? You scroll online, you see decent homes priced at $400,000, $500,000, even $600,000, and it feels like that's just the standard, like if you work hard enough, save a little, you should be able to afford it. But here's where the illusion begins. The price you see is not the price you pay, not even close, because buying a house is not just about the sticker price, it's about the system behind it. And that system is designed in a way that quietly filters out most people without them even realizing it. So let's go step by step. First, the down payment. Most people are told you need 20%, which on a $500,000 house is $100,000 up front. And already, that alone eliminates a huge percentage of people, because saving $100,000 in today's economy is not easy, especially if you're dealing with rent, bills, inflation, and everything else. So what do people do? They go for lower down payments, maybe 10%, maybe even 5%, which sounds easier, but here's the trap. The lower your down payment, the higher your monthly cost becomes, and the more interest you end up paying over time. So let's be generous and say you put down 10%. That's $50,000, which means you're borrowing $450,000. Now comes the part most people underestimate, the monthly payment, because it's not just the loan. You also have interest, property taxes, insurance, and sometimes maintenance or HOA fees. And when you combine all of that in 2026 with current interest rates sitting around 6 to 7%, your monthly payment on a $450,000 loan can easily land somewhere between $3,000 to $3,500 per month. And that's not luxury, that's just average. Now pause for a second and ask yourself, can you comfortably pay $3,000 every single month without stress, without sacrificing your lifestyle, without living paycheck to paycheck? Because that's the real question. And this is where we get into the income requirement. Because banks don't just give loans based on hope. They use something called a debt-to-income ratio, which basically means your total monthly debts should not exceed a certain percentage of your income, usually around 30 to 40%. So if your housing alone is costing you $3,000 per month, you would realistically need to be earning somewhere between $8,000 to $10,000 per month to safely afford it. And that translates to roughly $100,000 to $120,000 per year. And that's the minimum range, not luxury, not comfort, just to qualify and not struggle. And if you want to actually live well, save money, invest, and not feel trapped, you're looking closer to $130,000 to $150,000 per year. Now, let that sink in, because this is the part nobody talks about. Most people are aiming for a $500,000 house while earning far below that level, which means they either get rejected or worse, they get approved and end up house poor, where most of their income goes into the house and they have little left for anything else. And that's how people get stuck, stressed, and financially drained. Now, you might be thinking, okay, but people are still buying houses, so how are they doing it? And the answer is not what you think. Some people have dual incomes, meaning two people earning together, which makes it easier to hit that income range. Some people have family support, inheritances, or help with down payments, and others are simply taking on more risk than they should, stretching their budgets to the limit just to get into the market. But here's the truth that most people don't want to hear. Just because you can buy something doesn't mean you can afford it. And that difference is what separates financial stability from financial stress, because affording something means you can pay for it comfortably, consistently, and still have room to grow, save, and live your life, not just survive. And this is why so many people feel stuck today, because the goalposts have moved, the cost of living has increased, wages haven't kept up, and the idea of owning a home has become more of a financial challenge than ever before. But here's where this video changes direction, because I'm not here to just tell you it's hard. I'm here to show you what you can actually do about it. Because once you understand the system, you can start to work with it instead of against it. First, you need to get clear on your numbers, not guesses, not assumptions, real numbers. How much you earn, how much you spend, how much you can realistically save. Because clarity is power, and without it, you're just hoping things will work out. Second, focus on increasing your income, because at the end of the day, income is the biggest lever you have. Cutting expenses can only take you so far, but increasing your income can completely change your situation, whether that's through skills, side hustles, better opportunities, or smarter career moves. Third, consider starting smaller. Instead of jumping straight to a $500,000 house, look at what you can afford comfortably right now. Build equity, grow over time, because the people who win in the long term are not the ones who rush. They're the ones who play the game strategically. And fourth, don't ignore location, because where you buy matters just as much as what you buy. And sometimes moving to a more affordable area can make a massive difference in what you can actually afford without stress. And finally, understand that timing matters. The market changes, interest rates change, opportunities come and go, and being patient can sometimes be the smartest move you make. Now here's the part I want you to really think about. If the system is this challenging, why do so many people still chase it without understanding it? And the answer is simple, because we've been told that owning a home is the ultimate goal, the sign that you've made it. But in reality, it's not about the house, it's about the financial position behind it. Because a house can either be a foundation for wealth or a source of stress, depending on how you approach it. And that's why this conversation matters, because once you see the numbers clearly, you stop making emotional decisions and start making strategic ones. So going back to the main question, who can actually afford a $500,000 house in 2026? The honest answer is people earning at least $100,000 to $150,000 per year, ideally with low debt, stable income, and a solid financial cushion. And that's a smaller group than most people think, which is why this topic feels so frustrating for so many. But frustration without action doesn't change anything. Awareness does, strategy does, execution does. So instead of asking why it's so hard, start asking what you can do to position yourself better. Because the goal is not just to buy a house, the goal is to build a life where that house actually makes sense for you financially, and not the other way around. And if you've made it this far, I want you to do something simple. Be honest with yourself. Based on everything we just broke down, do you think you're currently in a position to afford a $500,000 house? Yes or no? And if not, what's the one thing you need to change to get closer? Drop your answer in the comments, because I want to see where you're at. And if this opened your eyes even a little, then you already took the first step, because understanding the game is how you start winning it. And the truth is, the math might be brutal, but it's also clear, and clarity is what gives you control. So use it wisely.